Hey everyone, hope you're having a good weekend so far. Filming this on Saturday. Just wanted to make a quick video to talk about and check out actually the Global X Canada January 2025 distribution announcements. There's some increases, but there's some reductions as well. So of course, I didn't go through all of them. I just focused on a lot of the more popular, especially the covered call suite. So let's go through them together. So we have a few decreases here. Let's go through them together. So BKCC, which is just Canadian equal weight Canadian banks covered call ETF, small decrease. So this one is going from 15 cents a month to 14.5 cents. The leverage version also is reducing a tiny bit from 24.5 to 24. So you have ENCC, which is the equal weight Canadian oil and gas. This is reducing from 13 cents to 12 cents. And the leverage version, ENCL, I know many of you have it, and this is actually their biggest, I believe, leverage covered call ETF. ENCC is their biggest one at 500 million. But this one is reducing 29 cents a month to 26.5 cents. So that's a fairly decent drop. Not insane, but it is. I mean, to me, I'm not really surprised. I mean, to give 14% yield with no leverage on Canadian oil and gas stocks seemed a bit rich to me. Same thing for the leverage version. So yes, I understand that these are oil and gas companies. Well, remember, there's not just oil and gas producers, but also pipelines. Pipelines are a little bit less volatile, but oil and gas companies are a little bit more volatile than the overall market. But these are really the big ones, right? Imperial, Tourmaline, Suncor, Canadian Natural. So not a crazy amount of volatility. And yes, they have really good dividends, but let's just say the average dividends of the stocks is 5%. You're still looking at a 9%. You got to make 9% a year in covered call premium. So I thought it was a little bit rich, but anyway, both of these have reduced a little bit. And even CNCC and CNCL. So CNCC was 10 cents a month. Now it's going to 9 cents. The leverage version, and by the way, this is the overall Canadian market, the TSX 60. CNCL is going from 20 cents to 18. So both of them have had a decrease of 10%. So those are the notable decreases. The rest are increases. So one of the things that really popped out at me, and it doesn't take a rocket science to notice this, all three decreases has to do with Canadian equity, Canadian stocks, right? Canadian oil and gas, Canadian banks, and CNCC, the overall Canadian market. So why is that? Well, the NAVs, it's not like the NAVs are doing pretty well. They stayed pretty strong, right? Even EQCL, the stock price is pretty strong. It hasn't went down 10%, 20%, 25% or anything. But I think maybe it's possible the volatility has gone down. It's also possible that the fund manager are forecasting a little bit of trouble for Canada ahead with the whole Trump tariff thing, especially the oil and gas. I think could be at risk here because if Trump starts baby drilling, oil prices tank, that could negatively impact. So I think they're just forecasting let's reduce a little bit for the next year, and I think that the distributions are pretty much set for 1 year, and then they evaluate it once a year. I'm just assuming, I'm just guessing with the type of distribution policy they have, that it's a very consistent dividend. So that's just my assumption. Maybe they feel, as a precaution, let's just reduce it on these Canadian exposures. But that's just a guess, right? We know that these distributions are based on how many dividends they bring in and covered call premium, mostly the covered call premium, which is based on volatility, but also the net asset value, right? If the net asset value is going down a little bit, or they're forecasting it to go down, maybe they reduced it because of that. But anyway, moving on to ones that have increased it now. So you have EQCC, the all-in-one. It's basically the covered call version of an XEQT or HEQT, ZEQT, etc. They recently added the Russell 2000 in here. So this one is going from 16.5 cents to 17 cents. And the leverage version, I know many of you like this one, increased it also 21 cents to 22.5 cents. So I think for this one, the main reason why is they added the Russell in here increased, right, which is probably one of the most volatile indexes in the US. So they added it in there, which probably gave them more premium, more yield, a little bit more. Also, as we'll see in a second, the S&P 500 doing really well, and they also increased this one here, the NASDAQ 100 as well. So that would be my guess for that one. Gold, the two gold covered call ETFs have increased a little bit. So GLCC, the gold producers, going from 22 cents a month to 23 cents. And even the boring physical gold one, HGY, is going from 5 cents a month to 6 cents a month. So I don't think it has to do with the volatility. I think gold's volatility has remained pretty stable, but it's been going up and up and up. So NAV goes up. They have more assets. They can write more covered calls. They take in more premium. It's not rocket science, right? Moving on to the S&P 500 USCC. So this one is not leveraged, and this one's actually staying the same. There's no change from as far as I saw, 12 cents a month still. But the leverage one, USCL, which is one of my core holdings, is going up 23 cents. It's going to 25.5 cents. So that's a 11% increase, which makes complete sense. You guys know just a few days ago, I released a short. Our distribution increases coming for USCL, QQCL, and HYLD, and I was pretty certain that it was a strong possibility for USCL and QQCL because, if you calculate 10% plus 25%, it's 12.5% yield, right? And USCL was much lower than that. Remember, USCL is just USCC with 25% leverage, and obviously, no doubt that the S&P and the NASDAQ both have done really, really well in the last year. They've been on the rise, right? And the most significant increase is QQCC and QQCL. So QQC, as we know, it's the NASDAQ 100. QQCC is going from 10.75 cents to 12 cents a month, the non-leverage version here. And the leverage version, which is one of my favorite and core positions as well, is going from 25 cents a month to 29.5 cents, which is an 18% increase. So this is fantastic news for myself or for you guys, whoever owns USCL, QQCL, and the other ones that raised it. Maybe not so great news if you're having a reduction, if you have the first three. So this one doesn't surprise me either. The NASDAQ really on a tear. So obviously, again, more net assets. More assets in the fund means more covered call premium. And remember, this is the leverage version as well. So they get even more premium. So it wasn't really a surprise for me, but definitely great news. So there you have it, everyone. Just wanted to keep you informed about these pretty significant distribution increases and decreases. Now, as far as are they going to keep it at these levels forever? The answer is always no. Remember that they could adjust them anytime based on what the market, what the volatility and what their forecast is, right? But I think, my assumption here, I'm just guessing, is that maybe they reevaluate them once a year. So maybe in January 2026, they'll reevaluate and there could be increases and decreases, but I don't forecast any crazy increases or decreases no matter what. Obviously, Global X Canada, by looking at the increases and decreases, just tell me that they're on top of things and they're taking precautions to make sure that the distributions are 100% sustainable, which is a very, very important thing. So how did these changes, especially QQCL and USCL, which are core positions, impact my portfolio? Well, guess what, everyone? There's going to be a big portfolio unveil video. It's actually coming on the 29th. So on the 29th, next Wednesday, is going to be a big, massive portfolio unveil video. There's lots of changes coming. Of course, the members already know, but for everyone else, you'll find out Wednesday. So hopefully you like this video. It's a short one, I know, but hey, just wanted to keep you updated. Please give me a thumbs up. I would really appreciate it. And if you're feeling even more generous on this glorious Saturday, please feel free to subscribe as well, because this is your number one source for income-oriented investing with a special focus on covered call ETFs in Canada and in the US. So if you want to like this style of investing, you always want to be updated, make sure to subscribe. So thanks for watching, guys. See you next time.